Welcome to the new weekly outlook. We can see that this week is not that active with the news. We only have 2 days with the red folder news on Tuesday and on Thursday. All the other days we are trading at the equities open, as always, at 9:30 New York time. With that being said, we don't need to be scared of any big three red folder news such as FOMC, CPI, and others. Let's start today with the BTC analysis for my crypto bros. We are starting from the monthly chart. We have this fair value area that is getting respected right here, and the previous month low is the draw on liquidity. So this is the bearish argument. On the weekly time frame as well, we had the weekly internal towards the external range liquidity, bearish push context to the lower side, also the bearish argument. We can see that we were juggling in this FEG, which is not a good sign, but eventually we swept this high and we are seeing huge respect from it and delivering lower. So previous week's low is the potential draw on liquidity. If we drop down to the daily time frame, we can see that we are basically respecting and having the bearish order flow legs from the weekly FEG, which means that we are ready to push lower. We can see that we had this inversely FEG, IFEG, where we pushed lower from with these candles wick, it moved lower. Now what I'm looking for to see is to get some more displacements to the lower side to get aligned and to deliver us towards the external range liquidity. Potentially I need to see some FEGs, some displacements to the lower side to get positioned once again. If not, the second scenario is that we may sweep these lows and then deliver higher towards the daily breakaway gap right here. So from external towards the internal, and then from here potentially move lower. But if we zoom out, we are bearish on all time frames, so it's valid to look for shorts. Same stuff is aligning with the Ethereum, Solana, and all the other altcoins. Hype is one of the strongest ones so far. Monthly is currently sweeping the previous month high, and weekly is creating the push context on the weekly time frame, so potential new buying opportunity despite the bad market. With that, on the daily time frame we had the daily push context that should deliver us higher, but the problem here was that, let's just mark this out, the problem here was that we had the opposing PDRA right here. This was the resistance, and once we flip that resistance, then we could seek the high, but as you can see right here, we just swept that, and this is the rejection high. We failed to move above that, to close the candle above that, which means that we're just basically playing ping pong between those two hard time frame levels. So I'll just align with the weekly and wait for the weekly to get created right here, and then we can potentially move higher from there. If hype still gets the strength despite Bitcoin going down and the rest of the markets. Let's see what are the indices doing. They are finally breaking out of the range to the lower side. I saw some bearish news that the debt is rising up in the US, all the war stuff and all that. So potentially we're gonna get some really nice buying opportunities really soon. I'm eyeing this monthly FEG on both assets as a draw on liquidity. On the swing lows, we are disrespecting them and creating the fair value area to move lower from there towards this monthly FEG. If we go to the weekly time frame, we can also see that we are disrespecting the lows with the body candle closure to the lower side, as well on the ES. ES is a bit weaker right now than the NQ. Like you can see right here, much cleaner price action to the lower side. Huge disrespect on this low, going lower, potentially respecting it and then going lower towards the monthly FEG as the drawn liquidity. If we zoom in on the daily time frame, we are seeing these disrespects as well, running the previous candle low, so the next candle is expected to continue to the lower side. Same stuff right here. And on the 4-hour time frame as well, we got the bearish order flow legs pointing us to the lower side. Basically, many FEGs pointing to the lower side, even though this one is low probability, same as this one, because of the third candle that closed like a huge rejection. But we have the two more opportunities right here, FEG and FEG right here. So I'm bearish on indices, also bearish on the gold. On monthly, it is definitely displaying towards the monthly FEG. On the silver, we are going towards the previous month low that is marked out. Huge gap up has opened and then delivery to the lower side. So on the weekly, same stuff. We are disrespecting the swing lows, making it a fair value areas right here, same as here. The next row on liquidity is pretty clear at these swing lows, this swing low, which is overlapping with the monthly FEG. And on the daily time frame, we can see that also running the swing lows, closing below the previous candle low, previous day low, so the next candle is expected to be continuation to the lower side, to expand the lower, continue lower. You can see that gold is a bit weaker than the silver because how the candle closure was below the previous candle low, while this one is still not hit, but draw on liquidity is pretty obvious on these ones. 4-hour order flow, same as on indices as well, pointing to the lower side, bearish arguments, so everything is bearish basically. We are looking for shorts. Let's see oil. Oil is on the run up. Monthly is currently sweeping this swing high with the wick right here. Will be great to get the close above that level once the monthly candle closes. On the weekly time frame, we have this breakaway gap right here that should not get filled, and just by the basically look of the weekly candles, we're expecting the next one to deliver towards the external range liquidity. On the daily, we have been chopping for a bit. We have this daily breakaway gap, but it may get filled just because of this consolidation. So the scenarios here are that we may just run this high and then continue higher, or we may retrace into the breakaway gap right here and then deliver higher. Or if this gap fails, we can, so if we get a closure below this level, we can get delivery lower towards this breakaway gap. But I think that some of these two scenarios will play out towards the externals because the war is still ongoing and it's not stopping currently, unfortunately. So a bit sad to see, but it is what it is. Let's see what is the king of the markets doing. So dollar is basically sweeping the big monthly swing high. Like you can see right here, it is respecting that area because the higher time frame wick is a lower time frame order flow legs to the lower side, which is just FEGs pointing to the lower side, like you can see right here. But let's see what is the weekly doing. On the weekly, we are having the breakaway gap right here which may get filled. But also it's good to know that we are respecting the fair value area right here. To the point, basically. You can see how this weekly candle closed above this fair value area. But I'm mostly focused on FEGs and highs and lows, not that much on the fair value areas. It's just a good point to note. On the daily, we're basically just shopping. We are in this daily FEG, but it's too deep inside of the fair value area, and I'm not a fan of. But if we are likely to move higher from this daily FEG, so from this daily FEG towards the external, I will need to demand some extra confirmations. So far we got the IFEG, but it's not enough for me. Like you can see right here, we ran that and we should now move higher from there. So only if we make a move like this, if we deliver higher from this IFEG and then create a new order flow leg and then respect it and then move higher. If not, we're just gonna chop around a bit. If this fails and this daily fails, this weekly breakaway gap is going to be draw on liquidity right here. We are aware that we swept really major buy side liquidity pool on the monthly, so this might be that reversal point. And this first daily FEG actually failed, so this low is just a ticking bomb basically, if we don't make some good displacements to the upper side. And basically inversely correlated are all the majors. So for example, Euro, if we are bullish on DXY, we are bearish on Euro, and GBP, AUD, NZD, and all the other pairs. So yeah, guys, thank you for being here. Thank you for your attention, and hopefully you get positioned. Safe trading next week as well. Peace.